So this is the bull market support band strategy, which we have open at the moment in the 5 minutes on SPY. We can see the two indicators, that is the MA cross 50 and 200. I have turned off the longer MA, which is the 200. I'm not using that because it's not really very helpful for intraday trading. It can be helpful to understand significant levels of the price. So sometimes you can leave it turned on. Sometimes if you can leave it off. But yeah, apart from that indicator, we have this bull market support band indicator. Sorry, bull market support band indicator, which is essentially two MAs plotted together to create some sort of a cloud, which is very indicative of a higher degree of confidence when something is breaking down. So these are the kind of entries we want. So if we are talking about good entries, why is this a good entry? So we see this is the red one on among the two MAs is the obviously leading one, and we see that the lagging one is actually crossing first, and no, sorry. The leading one is the green one, and the leading one is crossing first, and then followed by the red one, like immediately after. And after the push, the price moving beyond the cloud, beyond the MA, and the cloud itself going beyond the MA. It is retesting the cloud. That's a very good entry point for this thing. Now the opposite can happen. So here we have the same thing, but in this case, while it's trying to push. Uh, to for that kind of resistance, for that kind of support, and in this case resistance, it is actually breaking through and going above. So these are times to be careful if you are entering. So if you close here, that's a very low kind of risk you are taking. But yeah, that's the idea, and we get a lot of these every day. So this is because this is 5 minutes, and if we only see this is Friday ends somewhere around. So this is Friday. So we have clear two paths of the market. Again, two paths of the market, um, and two consecutive days. And even if we capture some of it, even if we capture some of it, that's I think yeah, it's a good enough results for a day. We don't get more like not every day will be like this clear up and down movement. Some days will be cross like this. So this was pretty cross for almost an hour there and almost 2 hours there. But yeah, not we have a lot of these stocks that we can follow through, like XOM, for example. Was yesterday was very good. If we look at this, let it load. Once it crossed below, it stayed below for a long period of time, and that's a huge move uh, for the price there. XOM. Apart from that, we mentioned Meta as well. So Meta did very well, not particularly as well as we would have liked, but the initial flurry of the price from 469 to 479, that's a $10 move, almost 2.2% in this case. That's what happened on Meta. So apart from that, you're also looking at SMCI, which you got on the wrong side of the trade. Essentially, you are trying to enter here, which is not ideal because we are very far from the price itself, and it broke down. And it, actually, in the downside, there was still opportunity to be taken on SMCI on the bearish trend. And as you can see, if we move out longer term, it has been bearish for quite some time. Since the mid part of May, it has been doing better on the downside than the upside. So these are kind of the things we need to make sure we are noticing. Again, with Nvidia, it did really well. For a moment there, it mid session it broke below, but it could not sustain for 15 minutes even, and it moved up. So from 11:33, the to 1150. That's like close to 2% move, and as much as we can expect from something like Nvidia for in the second half of the market. So these are the kind of things we want to target. Even triple Q was very up and down. Still, we got half a percent, more than half a percent if we timed it right in the last hour of the market. Uh, these are the kind of opportunities we want to target. AMD has not been doing well, but downside again, very good trade 2 hours after the market opened, and it opened very high. So didn't catch most of it, but still there was 2% left. Apple, it's too big for this kind of momentum trading. IWM again did very well in the second half of the market. Like 2.5 hours later, it pulled back from 205 to 203, which is 1% almost. So these are the kind of opportunities. If we get 1% on the stock, that's clearly 15% on the options. So that's why what we want to target. Amazon did really well. I think something it was something you are targeting as well, but again too big for this kind of move with lower volatility. Obviously, Amazon, Google, or Microsoft or Apple doesn't move. They don't move like Nvidia does, even with that high market cap. Nvidia is making 5% jump, which is like 150 billion dollars of market cap added every day, which is not a joke in any sense. Again, the VIX was at midday at 10% up. Then we saw that whole thing go away in the second half, which was something to be targeted as well. Maybe not the best way to catch this because we were pretty late to catch this. But yeah, in something like 5 minute strategy, yeah, with the divergences on the 5 minute, yeah, it caught it brilliantly as well. But yeah, doesn't matter. Uh, in the larger context of the market. So the idea is very simple. We have a band which is made up of an MA. We have a rolling MA of 5 minute on like 50 bars, 50 MA on the 5 minute, and we are trading the crossovers and specifically the crossover retests. This is crossover retest. So there are three parts to this: the price crossing below, actually five parts to this: the price crossing below the cloud, price crossing below the MA, the MA crossing below the sorry, the cloud crossing below the MA, or cloud crossing above the MA, depending on which side you are on, everything, and the retest of the MA, or uh, retest of the cloud, or the retest of the MA itself. Like it is retesting both at the same time, which is very good, and it is holding, which means this is very bullish for the price as well. Anyway, that's the idea we want to get behind. That's the idea we need to very carefully consider and trade, like build practice itself. So the strategy is built in a way that you will have opportunity in almost anything every day. So whatever stock you select, it doesn't really matter as long as they are stably volatile, uh, and you get that upside or downside. So it can be difficult to trade the strategy on a cross market like this. So you need something trendy. Downside, upside doesn't matter as long as they are trendy. So that's what we need to get after. Even if we look at something like GME, it was trying to be very cross yesterday, but after the crossover downside happened, yeah, it was not bad. Again, ARM did very well. ARM has been doing really well in the recent past. AMC was again, all that volatility did nothing, and it stayed cross for a long time. And like I mentioned, to avoid the $1 trillion, the like 2 trillion, 2.53 trillion dollar stocks, unless it's Nvidia. So Nvidia is only thing that can oversample the the volume and market cap pressure, and move in a way that makes it profitable on the options itself. But that's the idea. Anyway, there are other things you need to look at. Like I mentioned, all the websites you need to follow what is going on, check everything. that we have mentioned from say Twitter or Seeking Alpha, uh, or any other website that you find. Like for example, you will have the trending news of the day here. You go through what they are saying to watch, what is the news, what is the trending analysis from different. It doesn't take too much time. You can go to Financial Juice as well, which I think is also shared. Uh, get the context of the market, how to mm, like which stocks to actually find, uh, and trade in the day. Like if you go to the equities, it will give you uh, this is the top 20 S&P stocks implied volatility. So these are the stocks you would have to want to trade yesterday, as these are where the opportunities were. But apart from this, there are other things you want to look at, like pre-market price action. What is happening pre-market in the mark? If you go to this, and pre-market is closed at the moment, as you can see. Let me just remove this. So if you go to this, you'll find the top movers of the pre-market. It is closed at the moment, but yeah, you can see, in ideally this is yesterday's data, but yeah, you will see the price action, what is happening in the pre-market itself. There are other things as well, which all are included in the email you receive from us. Apart from that factor, uh, really, there is never anything little, and yeah, you can look for anything. Also look at what market data we have releasing on that particular day, which can affect you. You saw what happened on Friday. The market got swept up. We don't have too much data coming out today apart from the jolts, which is half an hour into the session, so that's the time to be careful as well, factory orders. But later in the week, it gets tricky on Friday. Like for example, it is a very tricky day with NFP coming out, even if that is before the market open, 1 hour before the market opens. So the market should get some stability in the open. But yeah, we have seen that there is still a lot of undue pressure on the market in scenarios like this. I'll recap the strategy in a physical document as well, like in a written document as well. But the idea has to be very clear. So we need trends. We need to stay with the trend, and because we are in the 5 minute, we will get in, get out with profit. Uh, the idea is like accurately like that. We are going in, we are going out. So we are not waiting to see what the price will going to do in 1 hour, 2 hour, 3 hour, 4 hour. We are trying to catch that 1.5 hour, 2 hour movement that is very trendy indeed. And that can happen in any stock. It doesn't matter as long as these stocks are not like lower market cap. We don't need to worry something about like it. If it is not more than 10 billion market cap, we don't need to touch it even. Like for example, CCL was a pretty clear opportunity yesterday, which I mentioned in the pre-market itself, like after the market open itself, and it continued through the session. So I mentioned it here, but it did the risk test later in the session. So if we were monitoring it, that might have been another entry for that stock. So this is another potential entry. This is what I was talking about. This is the retest of the tried to retest and bounce from the cloud. It could not. It went below, so and it tested the MA, and on the MA, it found support. It found support on the MA and cloud conjunction. It broke above, and then it carried on through the session. So that's a what 7% or something, 6% sessional gain, like from market close on Friday. So that's something we need to try. We need to keep track of what is happening. If something is rejected in the mid, like first hour or something, that doesn't mean it has to stay that way for the whole session. You might have the same opportunity on that particular stock again later in the session. So that needs to be monitored. You need to be way more robust in our monitoring and our research. The first hour when you come in has to be utilized to its like maximum potential, uh, because the research is the most important part. Which stocks you are trading? If you don't have a 10 stock watch list, you will not find anything in the market, because when the market is live, you're also trading, you're also doing research. That doesn't work. You have to be prepared for what you want to trade on that day, and only that way you will have the clarity you need to successfully execute on the trades planned already. For example, gold turned in the market yesterday. Barrick gold dropped for a lot in that volatility, but later in the session, like it was really good again, 1% upside from the crossover. Anyway, so these are all the points I needed to make. I'll also add this all to a document to which should help you understand this a lot better. I'll add some charts as well, but that's about it. I think on the context of how to set the strategy, what to look for in the market, how to do your research. Those all those Twitter pages, all those websites should be your focus 24/7, because unless you're really connected to the market, you'll not be able to cope up, because this is very competitive market, and because it's bi-directional, it's difficult to catch the movement in a timely manner as well. Anyway, that's all I wanted to say. But yeah, thank you.